My name is Benjamin Poole, and when I was 23, I gave my life savings to a broker who lost it all. But this taught me an invaluable lesson. I needed to educate myself to make my own financial decisions. Fast forward 20 years, I am no longer living paycheck to paycheck, and I want to share everything I've learned with you. Welcome to Financially Fit.
Hey guys, welcome to Financially Fit. My name is Lawton Ho.
And I'm Benjamin Poole.
Yep, as you can tell by his small muscles,
He's
ready.
yes.
He's ready to go.
That's right.
So welcome to Financially Fit, where we answer your questions. We not only answer your questions in the YouTube chat to the side, but every single day, not every day, every Tuesday. At 11 o'clock, I make a post around 11 o'clock asking for questions on our free member dashboard. And I'll be pulling from there as well as our live chat. So
That's right. Cool. Yeah, let's get into the questions.
All right, let's go. Take a look here at our member dashboard. First of all, Joe says, Garrett talked a while back about how GDX was lagging gold and has a big upside needing to play catch up. Can you talk about how that's played out, if at all yet, and where you see GDX heading? Where's it going?
Okay, so what he's referring to is the fact that gold was making all-time highs and GDX was lagging. So if you look at the chart of GDX, it is still not making all-time highs. However, gold, let's see, gold right here is at all-time highs still. So it's currently playing catch-up. So you had this big run from October all the way to now, and then we'll just go back a couple charts, go to GDX, go to the daily chart. And so from the October, let me see where the October lows were. Where are the lows? All right, well, here are the October lows. So it is still making, still playing catch up. It's got a couple different trend lines that I have on my charts. So it does have more potential upside move, right? So we have this down slipping trend line right here, connect this pivot high right here, this pivot high. And so we have broken out. And so it's already retraced. So it is actually poised to make all-time highs. So you're looking at a high of $45. And that's where I think your next big resistance will be on this chart. So right around $45 is where I think that GDX is going to go, especially if gold continues to move higher and higher.
Okay, so we should all in GDX.
Yeah, all in GDX.
Yep.
This is not financial advice, by the way.
All right, next question comes from Christopher. Christopher says, can you please take a look at the cryptocurrency stacks, STX, USDT? I have a very small position at $2, and I'm looking for good ad levels. Looks like there's resistance around the $1.40 level. What are your thoughts? Thanks for all you guys do in your service. Support at 140, not resistance, he meant.
Right, I figured support. So actually, this was just me pulling up the charts. So again, you have this down sloping trend line, connects this pivot high, this pivot high. It actually pierced right, broke through, came back, retested to the scene of the crime. And so technically we have a breakout. And so you are into some pretty good support. You got this pivot low right here. You've got all this price action right here. And look at where my support level is, right at 1.442. And then if it starts breaking down there, you have 1.253 would be your next support level. So those would be the first couple entries that I would get into, or I would add. What I'm going to do is I'm going to just take this, see how big of a move this is. So 27 to 36%. So if it gets down to this lower end, that's actually probably where I would add to it. Just so that way your dollar cost average will be right here at 1.441. So it'd be right essentially where you're wanting to add right now. So it'll really bring your average in. And it really depends on where, like what the size of your portfolio is. So if you've got like a 1 or 2% of your portfolio in, then you can add a little bit sooner. But if you've got like a 10% position, you might want to wait a little bit to add.
And I think he said he had a smaller position in that.
Okay.
Okay, so next question. Let's go to Samir. Samir's asking, what charts trade opposite with silver and gold?
It's a great question. The best thing to do if you're looking to trade inverse of gold and silver is to just do a little Google search, say ETFs that are inverse gold and silver. I don't have any for you right now. We don't trade inverse of gold, so that's what I would do.
Cool. So Dom says, question for Ben and Lawton. What are the official criteria for a bottoming tail and how do they get negated? Official and also official chart criteria for setting your stop loss. And what is the biggest and best on one currently on a weekly time frame?
I don't have any for you on a weekly time frame, but what I'm going to do is there's actually quite a few different criteria for a bottoming tail. And so what I'm going to do is I'm going to freeze this frame. So what you're looking for is at the lows of the charts, at least 90 to 180 candles. So as you can see, this right here was at least a decent distance from the lows. So what you're looking for is at the lows of the charts, and then you want to make sure that the body is in the upper 50% of the entire candle. So if it starts getting down below 50, if the body, like this is the body of a candle, if it gets below 50%, then it's not technically a bottoming tail. Also, it must close in the top 25%. If it doesn't close in the top 25%, again, it's not a bottoming tail. Now, the criteria, and it depends on how you play it. So you could either wait for a 50% retrace, or some people who actually get in right at the close. Okay, so it's a confirmed bottoming tail, so I'm going to get in at the close and then wait for a bigger move higher. There are some people who wait for a 50% retrace, and then you could even wait for like a 75% retrace or lower. So that's how you would enter the bottoming tail. So the stop out is any close below on a daily time frame. Well, actually, I say daily, but it really depends on the time frame that you're looking. So if you're looking at a weekly chart, then it would be on a weekly closing basis. So I tend to stay away from weekly closing basis. The reason is it can play out like you can drop below a bottoming tail 3 or 4 days, and then that 5th or 6th day, it just really flushes out. So even on a weekly time frame, I would probably put my stop on a daily closing basis below that that bottoming tail. So that's how I'd play it. But the technical way to play it is any close below on that specific time frame.
Cool. Okay. Next question. So let me take a look here, see if there's anything. And again, you guys can leave questions in the chat. Irish Joe Crypto. Okay. He's asking a question about bullish or bearish, but I'll save that to the end, Joe. We'll save it for our bullish or bearish section.
All right.
So, where we kind of go speed running, bullish or bearish. Let's see. Oh, okay. A lot of people want you to talk about Nvidia. I mean, big day today for Nvidia. Bad day for Nvidia.
Well, it depends on which way you're predicting the charts to go, right?
So
it's a good or bad day on Nvidia. So here's a downsloping trend line that I have. This is just on the 1 minute chart right here. So you've got this downsloping trend line. It broke above. And then so what I did was I also created this downsloping trend line, which it broke above. So this, for me, it's a bullish pattern. So I'm actually looking for a potential upside. So there's a couple different ways you can attack this, right? So we were going over this in the live day trading room, and I think Lawton did a video on this. So here is actually a chart. You've got this W. Oh, give me 1 sec. You've kind of a WV pattern, right? So you've got this W right here. And then, I know Lawton doesn't see the V necessarily. And it's not necessarily that it's a straight down, right? It's a slow fade all the way till basically this pivot high. And then so what you would do is you would take this right here, take a measurement down to here, and then that is what you're looking for, an upside move once it clears here. And so we're looking at an upside move of probably back to about $113, right? So the V can be a little bit obscure, right? So again, it doesn't have to be a straight move down, but you're looking for an entry at this price or a lower, and any stop out, I mean, you would stop out at any close below the bottom of the W. So that's where I see Nvidia today. Overall, it's still, let me switch to the daily chart. Lawton was indicating that there were a couple different people asking about Nvidia. So here are a couple different levels. If it continues to flush out, you've got this gap fill right here. You've got this gap fill right here that it's already filled. Or let me see, did it actually fill that? No. So this would be the next level, 108, basically a pierce of 109. Still needs to fill this gap, and then you've got a lower gap here, and then you've got the bottom end of this green bar candle. Right now, it's still not a broken pattern. You've just got a couple, 1, 2, 3, 4, 5, 6 kind of down days. I understand this is a green candle, but it's still projecting itself down. So in a couple days, you'll probably get a significant bounce. And when I say significant, it'll probably come back up to this 120 level, fill this gap, and then at that point, it can roll over. So that's the chart I see on Nvidia.
So all in on Nvidia now.
All in on Nvidia. Yeah, of course. You know, there's nothing can go wrong if you go all in on a trade.
Yep, that's what I learned.
Yeah.
And I also learned that a V doesn't have to look like a V to be a V.
No, it's just the general direction of the charts, right? And it's really you're playing the pivot of the W on any move kind of down.
Cool. All right, next question. Let's see here. Trying to skip around. Upriver Rafting. Thank you for always asking so many questions. We appreciate it. How do you know the implied volatility of something, of the earnings?
You just got to search for it. It's out there. Google is a great way to search for implied volatility. And I think that implied volatility is talking about the options volatility on it. And so that would be, they would give you an idea of how volatile the overall market is anticipating that particular stock being.
And I just want to let you guys know that if you want, Benjamin Poole and Dr. B have an earnings trader service.
That's right.
Where they trade the earnings of these large companies a couple times a week. And we've made some solid couple of weeks, right?
Oh yeah, absolutely.
So if you want to learn more about our earnings trader service, go ahead and check it out on the Verified Investing website. Okay, let's keep going. All right, question here. Normally Gear says 4 or 5 hits on a trend line and it'll likely break through the trend line. When he charted the Dow Jones going back to 1899, there have been 5 hits to that trend line. Yet he said probability is it will respect the trend line. When do you expect it to break through, the 4th or the 5th hit? Only when it happens in days, question mark?
Okay, so let's take a trend line. So he was doing an upsloping trend line, right? Mm-hmm. So this is, what, 1890 is what he was doing? And then it hit again, and then it hit again. But the distance between here, maybe this was 1939, and this was 2020. So the distance in which it takes to get back down to this level makes a huge difference, right? It almost makes it as if this hit didn't really even matter. So that's something that I would say that to take a look at, even though it's 5 hits, it's all about how close together those hits are. And let's say it hits every 10 years, then you would have a significant pattern in which those hits came to play. And then that 5th hit would be a particular, it would be a weaker hit on that particular trend line. Also, if you're going back to over 140 years, 150 years, that trend line is a significant trend line, meaning that it's going to take a lot more hits in order to get below that. XRP is a good example. Although it doesn't have quite the same distance, it's still got pretty good channels as far as creating a nice wedge pattern for a hit to the upside and the lower end of the parallel channel. I mean the wedge pattern.
I have a GC question from you, from EK97. Thoughts on Progressive? The RSI negative divergence is massive, and it's on its 8th green candle, which should, I know you love that word, should signal a pullback. What do you guys think?
Oh, man.
On progressive.
Progressive.
Negative RSI divergence.
Yeah, let me pull up the RSI. No, actually, it doesn't have negative RSI divergence. I'm looking at the chart, right? Here's the chart of progressive. So one thing you have to keep in mind when you are charting the RSI is this is still trending slightly up. And then so this is trending slightly up. Negative RSI divergence is it when this starts to tail down. So if this were to start to tail down and this continues higher, so then you would start to get some negative RSI divergence. So I would say that unfortunately this does not give you an indication that it's oversold or it's about to turn. You do have a lot of different candles, and so what you have to do is you actually have to wait for some sort of a reversal. And so what I would do is take this trend line right here and notice that you're staying above this trend line, so it's respecting this trend line. Now, if you start getting a topping tail, or a break of this line, then you can start seeing further downside. RSI indication or negative RSI divergence is just one thing to kind of go off of. It doesn't give you it doesn't tell you exactly when it's going to roll over. And you might say, well, it's higher over here on the RSI than it is here. And then you have this moving up and this moving slightly down. For me, what I've noticed is on the daily time frames, anytime it pierces the 50, the RSI is then changed, it's negated, and then it starts over. And so if you noticed, it goes here, the stock's moving higher, the RSI is moving higher. So again, you need a little bit more confirmation for the RSI, as well as some sort of a pivotal change in the actual trend of the stock. Or else I would leave it alone.
All right, last question, then we'll move to bullish or bearish. Okay.
Okay.
So, Aaron says, "Good day, VI team. Curious what your thoughts and experiences are with private equity shares of a company before they go public. I'm specifically looking at a company like Ripple."
Okay, so the question is, what is my experience with
and thoughts,
like basically a pre-IPO?
Yep, about getting into a company with a pre-IPO.
So here's, like Ripple, I don't know, because that's a crypto, right? So sometimes cryptos can soar, because you have had experience with that. So why don't you tell them what your experience was?
Sure. So I got into a pre-ICO for this company, this coin that I guess it's a gaming company in the crypto space, and they had a pre-ICO, and I got in at pretty good price, like 12 cents, and then I went public and went up to like $2, which is insane. But you can also see it go the opposite direction. Let's say the ICO starts at like, or IPO, pre-IPO starts at like $1,000, and then you realize that the demand isn't there. There might be a small pop on the hype, but then it goes down to $200 because you realize it's overvalued. It's a lot of, it's really volatile.
So with everything, it's risky, right? And so here was the pre-IPO, so the pre-IPO of Uber was probably around $40, and then the IPO was slightly higher. And then look at what happened. You could have picked it up below $20. What is this level? Right around 14.41. Excuse me, 14.11. So $14.11. So you could have picked it up almost 75% cheaper than you would have gotten in even on the IPO. Even if the pre-IPO were $30, you would have picked it up for 50% discount. So there's risks, right? I mean, anytime you're investing in anything, it's a risk. So you've got to weigh whether or not it's if you can afford to lose the money that you're investing. So, and if you can, and you think, okay, well, the risk to reward, it could be like that stock. I mean, that gaming coin, it could have the potential of going up 200% or 2,000%. But I have $2,000 in it. Well, I'm willing to lose 2,000. So and each individual investor has to make their own decision
Okay,
on that.
last part. Bullish or bearish? Quickly, okay?
Okay.
And if you're not familiar with this segment of Financially Fit, I throw out charts at him that you have given me, and he tells me bullish or bearish, and he has around a minute for each chart. You ready?
I am.
MSTR.
Oh, see, you can't really go based on
Bullish or bearish?
You're giving me bullish or bearish on Bitcoin. All right, so that's essentially what you're doing. MicroStrategy is a Bitcoin play, and so this is all going to depend on what happens with Bitcoin. So I do see that. Let me see here. Okay, I'm just trying to see if there's like any parallel channels. Okay, so you got kind of this parallel channel right here. I'm not sure what. Okay, so you have a parallel channel. We're just going to play parallel channel. You have this pivot high, pivot low, pivot low. So right now you're probably trading in the lower end of the midline. And so I actually say this is bearish. Bearish down to the lower end of this parallel, this parallel channel. So right around
90
bucks. This did a stock split, so I'm thrown off a little bit. Last time I saw it was like $1,500. So I would say bearish all the way down to the lower end, and then at that point, it looks like it's right at this green bar high, and so then I expect a bounce.
Okay, I see somebody spamming the chat. GDX. We already did.
We already did GDX.
So is that bullish or bearish?
GDX?
GDX.
Well, short term, I would say bullish, remember, because we broke that trend line.
Okay, there you have it.
All right, so what I would do with GDX is, thank you, Lawton. I appreciate it. So what I would do is, you've got this hit right here. Let me erase this pivot high, pivot high, pivot high. It tried to break out. This was the third hit. Fourth hit, it tried to break below, but now it's outside of this downsloping trend line, and so it's bullish. So I would actually wait for probably a retest to the scene of the crime before an ultimate breakout, and I would say the high would be around 47.50.
Okay, couple more.
Oh, a couple more, not
couple
just
more.
two. Okay.
One more.
All right, one more.
Dell.
Dell.
Bullish or bearish?
All right, here we go. I had this on earnings. Oh man, I would say bullish. It's got a great chart pattern. So here's the bearish, bullish case. So you've got this upsloping channel right here, looks like a parallel channel, and this sideways consolidation. And so what I would do is I would take this measurement from here to here, which I've already done. I didn't know he was going to do this. Take it from here to here. So I would say an upside target probably around 135. So I say bullish just based on the fact that it put in this sideways consolidation, which is a bull flag.
All right, cool. Thank you. All right, guys, thank you so much for joining us on Financially Fit. If you want to ask these questions to Ben personally, you can book a private session with him for an hour and ask him all the bullish or bearish, every single chart you'd like.
As long as it fits within that hour.
As long as it fits within that hour.
Yeah, that's right.
And if not, you can just buy another hour with him. I'm sure he wouldn't mind.
No, that's right.
But yeah.
Cool. All right. Well, thank you guys so much for watching and commenting. We really appreciate it. And keep in mind that this is for educational purposes only. Please do your own research, and we'll see you next time on Financially Fit.
See you.